morning, traders. Welcome to the TMT stock market strategy video for Thursday, February 9th. Well, guys, the song remains the same. It's been like this for quite some time, and I have to say it's been a very long time since I've seen price action this horrific. I mean, it is literally, I want to put this in perspective. Here's a 10-minute chart of the SPY. This is all of 2017. Look at the range-bound trading that we've been in all year. Does this tell you to start increasing your bets, your positions, or increase your share size or your contract size? Absolutely not. This market is dead. It's absolutely insane. Now, there's definitely nuggets within, and you have to understand how to trade it. But as of right now, looking at the overall market in this video is horrendous. I mean, literally horrendous. And if I went back into 2016, you go all the way to July. We have been technically in a range-bound market since July. July, guys. This is horrific. But this is what the market gives us, and this is what we need to adapt, change, alter, if you will, your trading style to adapt to what the market is giving us right now. Now, does this change? Absolutely. I think it's just about ready to change, and I think the market wants to believe that it can't go down. And that's where it sucks everybody into the long side, and that's why we need that one more blow-off top, that capitulatory, throw the towel in for the shorts, buy everything, mortgage the house for the longs, and that's when the market will top. Until then, we could be range-bound for quite some time. I don't believe so. I think that the markets are just about ready to explode, with the VIX almost again at all-time lows, consumer sentiment at 6-year highs, 24 times forward PE earnings, very expensive market where there's other markets around the world that are much cheaper than we are here in the United States. Bonds starting to sell off again. Rates are starting to pull back again. This is a recipe for disaster. Now, many of you have emailed me, contact me, and say, oh, you can't pick a top, whatever. Of course not. We cannot pick a top. You're never going to pick a top. You have to stay with the trend. But what you can do is reduce your share size, because at any given moment, this market's going to fall out of bed. I'm telling you. I could see it. It's been 30 years I'm doing this, and reminds me exactly like the 1987 crash, which I wasn't very active in, 2000 crash, 2009. I'm telling you, it's just about ready to explode. You have a president that's a little irrational with everything he does as far as tweeting, and I just don't see the markets. There's really no reason for the markets to even move any higher than what it is, but it can and it will, because it's going to suck everybody in. Remember, the markets are made to fool the masses. That's all you need to know, guys. All right, let's get right into it. There's really no change at all, but I just want to run through the charts with you. Here is the dollar. Nothing happening here as of yet. A little bit of a pause, a slight drift higher, a little corrective move to the upside. I'm not impressed with this move at all. If anything, looks like a bear flag here. I think we probably will fill this gap. Well, we actually did fill the gap, excuse me. Maybe test the 200, and that's going to be a critical juncture right here. If we fail and we close below the 200, then I think all bets are off for a while, where the dollar starts to correct. I don't think that's going to happen yet, because once you get a little bit more fear, you're going to get a rush to the dollar and, of course, gold. Here's the TLT. Nice breakout to the upside. Remember what I mentioned. I showed you yesterday, guys, the commitment to trader reports. If you know how to read it and you can handle it and put in the back of your mind what the producers are doing, doesn't mean, again, it's not a timing tool. But when you get to these extremes, where we are at these extreme bottom, you can look for a relatively healthy trade to the upside. And that's what happened yesterday. Now, we still have to take out the swing high here. Okay, this swing high still needs to get taken out. And that it will definitely confirm at least that higher low from this previous low, and then we should give one of these type things and then move at least to fill the gap here. I don't think bonds are starting a new leg up. If anything, I think when you get up to these areas here, bonds is going to be a great shorting opportunity. Rates, I believe, have made a generational low, and I think they are moving higher. Okay, now obviously rates have paused and started to roll down a little bit, which is fine. But I do think there should be a little bit more movement. The only thing that may alter or stop this little corrective move, the 10-year note auction was actually horrendous. It went horribly wrong yesterday, and that's where sold bonds and top ticked a little bit on the rates. GDX, You could see rates also helping on a pullback, helping gold. This is we confirmed this head and shoulders, inverted head and shoulders pattern 2 days above, which we are. Let's see, we get a little bit of move back and hold, a little pullback and hold this neckline. Then we're off to the races. Then I think we might be starting that second leg here, okay? But gold doesn't act like this for anything, guys, okay? There's a reason for it, because gold, of course, there's inflationary issues and rates, but also it's a safe haven trade. GLD, same thing. You can see here. I think it's a little bit stretched right now. I think it needs a little bit of resting as well. I wouldn't look to buy gold or GDX here at the moment. Spiders, what can we say, right? We have a very large bearish rising wedge within a small little bearish rising wedge. And you can see here, guys, all we're doing absolutely nothing. All of 2017, we have been literally within a 5-point range. Okay, 5-point range in spiders. And then if you look back, aside from this Donald Trump rally, okay, which Donald Trump said in his campaign, we're in a big fat bubble. And if people cannot, or people I should say, longer term investors don't realize that if he actually said it, and he said it when we were down here somewhere, so we're at we were like what 30 points away when he said it. So just be careful, guys. I mean, it's nuts. When I mean be careful, I mean, you know, position yourself wisely with some protection, or trail your stops, okay? That's what I mean about being careful. But you can see here, we went range bound, we pop lower, range bound, pop lower, then we had the Trump rally, and then from as of 12/13, we have gone nowhere, okay? We're going on now 2 months, 2 full months of doing nothing, all right? Sideways moving. So indexing is dead right now. There's nothing really to do in indexing. You can see here 2 double tops. We got a nice double bottom here. We really need to take out 226.45 to alleviate any upside pressure here, okay, in spiders. IWM, the weakest of the bunch here, but still confined in this downtrend channel, or if you will, this bull flag that I mentioned, this very large bull flag. And you can see here, so there's a nice big bull flag pattern for you. Again, breaking out to the upside or breaking down to the downside is going to start that new current trend, okay? So what we have to do is wait patiently. These indexes are doing nothing. You could see it. We've just been consolidating at the upper range. Nothing wrong with it, but for active traders, you want to stay away from this. It's just a waste of time. Qs, same thing. Made new all-time highs yesterday. Yet again, top tick this uptrend channel. Let's see if we get any movement. But again, look at volume. Volume on the way up is dead. Absolutely dead. So this is something that you might want to consider if you're holding a position, because there is no volume, okay? So be careful out there. Let's see what happens today. We need some movement. We need some movement to get going. VIX, remember, guys, is at its lows or near their all-time lows, and Bollinger Bands are pinching. That means that we're going to get an explosive move of volatility, okay? Have a great day. Be careful for those of you who are out on the East Coast here in the United States. Big snowstorm.